Welcome to the Parsonage Vandenack Williams LLC video library. The purpose of this video is to explain the basics of a common entity form, the limited liability company. Is this the entity for your business? A limited liability company, or LLC, is a flexible business format that blends elements of corporations and partnerships. The limited liability company is an entity that works very well for owners who want limited liability and flow-through taxation, but can be used like a corporation. While a limited liability company is a flexible form of entity, it is not the best entity for all businesses. An important feature of the limited liability company is the ability to elect the type of taxation that will apply. A single-owner limited liability can elect to be treated as a disregarded entity. In that case, the income flows through directly to its owner on his or her personal tax return on Schedule C. A limited liability company may also elect partnership tax treatment, corporate tax treatment, or S-corporation tax treatment. For those limited liability companies electing partnership tax treatment, significant flexibility is offered in the allocation of income. Certain debt can be treated as basis, allowing members to deduct losses to a greater degree than an S-corporation shareholder. This is one reason why limited liability companies have become so popular. You can have the liability protections of a corporation with the tax benefits of a partnership. Limited liability companies as an entity form have been recognized in all 50 states. However, the laws vary on numerous issues. Some states do not recognize the flow-through tax treatment of the limited liability company and tax it as a separate entity. It is important to consider the laws of the state of organization in determining whether the limited liability company will be the best entity for your business. The next feature we will discuss is the management of the company. Limited liability companies can be member-managed or manager-managed. For a smaller business with a few owners who are actively managing the business, the member-managed limited liability company will offer simplicity. For those companies with members who will not be involved in active management or who want only a few persons to manage the company, a manager-managed entity may be the better option. Limited liability for all members is an important feature of the limited liability company. Generally, members will not be personally liable for the obligations or debts of the company unless they provide a personal guarantee. It is important that the limited liability company be operated and treated as a separate entity by its owners. There are still a variety of ways to be at risk for personal liability when using an LLC. Some examples include owners who commingle personal assets with the business assets, and companies who do not use the full name of the entity in its business dealings risk losing the liability protection of the entity. Another feature of the limited liability company is that it allows its members to offer as many classes and types of equity interests as the members agree to. Of course, if the company elects to be taxed like an S-corporation, limitations will apply the same as if the entity were a corporation. The company can provide the various classes in its operating agreement or other member agreement. There are no required filings with the state. The classes can be amended and changed in accordance with the rules for doing so established in the operating agreement and as limited by state law. The law of fiduciary duties of limited liability company members is not yet well developed. In the corporation arena, directors, officers, and even certain shareholders have fiduciary responsibility to shareholders. In the partnership arena, partners have certain fiduciary duties to other partners. Different states apply different standards to fiduciary duties of members and managers in limited liabilities. The current trend is that the laws creating limited liability companies are now specifying what fiduciary duties will apply in order to avoid uncertainty. Creditors of members can obtain rights in the limited liability company in varying ways, depending on the state of organization. In some states, creditors can obtain a charging order against the member with respect to the member's limited liability company interest. However, the creditor cannot seek dissolution of the limited liability company to get to the assets of the member. In other states, creditors can obtain full ownership of the member's limited liability interest subject to the provisions of the company's operation agreement. Limited liability companies can sometimes offer significant advantages over a partnership in limiting the rights of the creditors of its members. For more information on limited liability companies or other business entity forms, please view our Tax and Business Law blog or view our other resources at pvwlaw.com. If you are interested in forming a limited liability company, you may select Form Your Business in our Client Tools section to complete the Business Entity Intake form. One of our tax and business law attorneys will respond to your request.